Good afternoon and welcome to this session on setting up a trading plan that fits your style. Today is Thursday, October 20th, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be emailed to you, so you will be able to review the material again at your convenience. If you're new to attending Trader Planet webcasts, you'll be pleased to know that we have previously recorded sessions on our site at www.TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions let Darrell know if he's been effective with the discussion and helps as he prepares future presentations, so we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right of your screen, and we'll stage the questions for Darrell to answer. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. Darrell enjoys helping others succeed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial contributions on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darrell. Thank you for that introduction. And just a couple of notes before we get into today's presentation. We are sponsored today by Wassendorf & Associates, which is a publisher of SFO. And then, of course, there's Vantage Point intermarket analysis charts that we will be using. And when you put those two resources together, lots of information and lots of educational opportunities, plus what you have on TraderPlanet.com. So a total educational package right there within those different products that you have available to you. Well, today's topic is going to be perhaps on something that may be, beginner type to some people. When you talk about plan your trade, trade your plan, and you probably heard that saying, that axiom, a number of times. Is kind of one of those things that goes around, so everybody doesn't think a whole lot of it. It's just like when you talk about things like planning and setting up the psychology of trading, very important subjects, but everybody kind of puts those topics aside and really doesn't want to think about it, thinking that it's not important. But we're going to go through a series of M's here just to kind of put it together, hopefully maybe stick a little in your mind as if you're starting to trade or if you are trading, and what you can do about the M's that could enter into making a trading plan. The first, of course, is your motive for trading. Obviously, you want to know why you want to trade. Maybe it's to make money, so that's obviously a natural goal. Maybe you want to preserve wealth. Maybe you have some money, you want to preserve it. For some people, perhaps it's the excitement, and if that's your goal, probably, it's like gambling or anything. You're probably going to deserve the faith that you get. So we're going to talk about a motivation. We're going to assume that the motivation is that you would like to make some profit, that you would like to be motivated by the opportunity to improve your trading results, to improve your financial situation. Mentality. Now, everybody knows that if you need to have some kind of trading mentality, which is the ability to move in and out of positions, take what the market gives you and not fight the market. You don't control the market should not control you, but you need to be able to accept and react to conditions. Now, not everyone is comfortable as a trader, so we'll say that right up front. Years ago, I did a seminar with the marketing manager of Shearson Lehman. I think it was Shearson Lehman at that time. It's gone through several name changes, but one of the first things that he said that he tries to tell prospective traders is, I'd like to scare you out of trading. And he would present all the the bad case scenarios, because he didn't want them to assume they were getting into something that is promoted often as a get-rich-type scheme, but that it is a real hard work type of situation that can involve loss. Know what you're getting into. And then if they persisted, then he indicated they might be serious enough about the subject to become traders. Well, one aspect of the trading mentality is you have to be able to control the two emotions that can wreck traders, fear and greed. Now, I know it's impossible. You almost have to say it's impossible not to bring some emotion into trading when it involves your money. You're not a robot, after all, and you have to have some emotional involvement or you won't be into the trading game at all. In that regard, some degree of fear and greed are good. Now, you need to have both. Maybe not the Gordon Gekko greed is good viewpoint, but if there were no greed in the world, then a lot of things would never be attempted or accomplished, and you have to look at greed as a positive up to a point. If it is an excessive greed, of course, it can be very ruinous in many different ways, especially in trading. And you also have to have some fear. You have to have respect for the markets. You have to have respect for what they can do. Maybe it's the fear of losing money, or the fear of being wrong when you take a position, or the fear of missing out when everybody else is making a lot of money, or the fear of when you do get a profit, seeing that turn to the loss. A lot of fear factors that can be involved in the futures market. And of course, it's good to be afraid in some ways, very good, to be afraid. Fear makes you analyze and trade carefully, but you can't be paralyzed by fear if you want to be a trader. Like the old saying goes, nothing ventured, nothing gained. And so you have to have, overcome the fear. And if you're going to underclimb a mountain, or if you're going to undertake a project, really involving extreme danger potential, you aren't likely to do it without some kind of a plan and preparation for what could happen. Like this picture that we show here with the mountain climber moving up the mountain. When we visited Yosemite this summer, we saw lots of climbers with ropes and all kinds of other equipment in an effort to scale the rocks. Now, I'm not a mountain climber, so it's not something I would undertake, and I would stay off the mountain. So if you aren't prepared and trained to trade, you will not have the confidence to tackle trading either. So if that's the case, if you let fear dominate, then stay off the mountain or out of the water or out of the market. Or as Harry Truman used to say, if you can't stand the heat, stay out of the kitchen. So those are a couple of caveats that we're going to say, but we'll assume that you have made the decision that you want to trade, or you want to learn to trade, and are able to handle whatever the markets can throw at you. And we will make one other assumption: money, that you have adequate funds to trade in the manner that you like. Now, you've probably heard it said that it takes money to make money, and that is true in trading as well. The biggest reason that traders fail tends to be because they are undercapitalized and can't stick with the market as it makes its moves. The money that we are talking about in this case is money that you can afford to lose without its loss affecting your lifestyle. That is, you don't want to be using your grocery money or your rent money. You don't want to be borrowing on your credit card. There's too much leverage in many markets to take the risk of losing money, and you can't afford to endanger your family or your lifestyle. For the most part, I'm also talking about money that is outside your 401k or IRA pension plans or retirement programs or educational funds or whatever it is. It's sometimes possible to trade within those plans, but you want to avoid taking the risk of those things that could definitely change how you will be able to live. Now, how much money do you need? Well, this is going to depend on the next three items